get to the bag, ayy. Got the foot on the gas, pedal to the metal when the lane moving fast, ayy. Ayy, let them all cross. If they hate, then let them hate and make a bigger boss, ayy.
This episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys provide some actual insight into what you can do with all of this information. If this is your first time tuning in, welcome. This is the real side of freight, ladies and gentlemen. And I do say that before every single show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, I want to talk to the right individuals who have done what you're looking to do or who are currently doing what you're trying to achieve, so you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Wednesday, everybody. I got a very special guest for you guys here today. We're going to be talking about my absolute favorite topic in the industry, and that's insurance. And some of you guys might roll your eyes when I say that, but at the end of the day, trust me, you need to know exactly what your insurance covers, the carriers that you're sourcing out there, ensuring they don't have any exclusions on there that potentially don't cover your customer's cargo. And I got Mr. Billy Worthington on the show today. Billy, thank you so much for taking the time to join me.
Thanks, Chris. You often don't hear favorite insurance in the same phrase, so that's good to hear.
Dude, it's one of those things, Billy, where I've grown to love it as my business has grown, as I've moved up quite a bit of freight in my career, and having the right insurance coverage has saved me in a couple of instances where it probably would have cost me, six figures to buy out and, buy the damaged product. But before we get into any of that, man, how did you get your start in insurance? Kind of what brought you into this?
Yeah, so I started at insurance about, it was a little over 10 years ago at this point, and started at Falvey and had the opportunity to come over. I was actually, ironically, in the logistics space a little bit prior to that. And opportunity came about, started real green, real new, and there was a new great product offering that Falvey was doing that they brought me over to help kind of help me grow and help kind of get it out to the freight industry. We were always a cargo product, and it was kind of focused in the direct to the shipper, the direct supply chain side, so that we were starting this new vertical to help with the freight and freight broker community. So that's where I got my start.
Yeah, it's, I look at insurance, and, with you being on the logistics side and then jumping onto the insurance side, I look at, like, what do you think is the biggest myth in regards to the paper certificate that people are sent over?
Yeah, so the COI is often it's misunderstood, because really what it is just evidence of cover. It's to show that you have a limit, and it's just what everyone sees in the auto coverage space when we get something for our personal vehicles is, hey, you have this evidence to cover, you have these limits. The real policy is what dictates what happens with coverage. So the real policy is what actually dictates what the insurance company is covering in the event of a loss. So that is far different than just a limit. There could be terms in there that dictate what actually happens in the event of a loss that could differ from what you see. There could be a sublimit, there could be exclusions. There, typically in cargo insurance, you see excluded commodities, and that's one of the big things that you will not be able to see on a certificate of insurance because of that. Excluded causes of a loss as well. If this form of loss happened, this will not be picked up by this cargo policy. So that's the stuff that you will not be able to see if you're just looking at a COI. You'll see what the limited cover is, but you won't really know the details of that and the terms of that policy.
So what do you suggest brokers do in this situation, right? Because it's like every time you set up a new carrier, you always ask W-9 authority and insurance. A lot of it's all digital now too, but it's like, how are you insuring, and like, what are you seeing out there, and how do you advise your guys as customers to go out there and see, like, is your carrier even, are they even able to haul this?
That's a very difficult task especially for freight brokers, because we know how fast their industry moves. We know how fast they need to get a load booked. They get their customer is very demanding on their side. They need to get freight moved. So it is a difficult thing to balance, because even if you onboard that policy that carrier and get their policy, it could change. And then also it's usually a pretty robust document to where it takes a little bit more of a nuanced knowledge to go through it. So I hate to say, unfortunately, there's not a silver bullet here. And that's why there are in the industry other coverages put in place, kind of options to help further protect your business. So that's where getting a cargo liability policy for the freight broker will help, where it's, what doesn't get picked up by that carrier policy can get picked up by this cargo liability policy. And then there's also the all risk policy this rider that can be purchased to say, hey, I'm not sure. This is knowing your customer side, knowing what the freight looks like, I'm not 100% comfortable that this could fall into a covered loss. I would go and get a separate policy as on a transactional basis to cover from origin to destination. And I know the terms. I can read the policy. I know everything that's covered in this policy.
I see that as a major risk for a lot of brokers and even carriers out there that are, because again, it's fast paced, right? Hey, get the freight, get the truck covered, do all of that. So it's a common oversight by a lot of organizations, and but it's also a major threat to a lot of companies that are out there, because if you're moving even a standard load, right? Say it's only $65,000, $70,000, and I don't say only in the sense of like that's not a lot of money. But it's like, comparatively speaking to the $300,000 to $400,000 machines that my brokerage moves, it's like, but again, $60,000, and then insurance denies that claim. And then your customer's looking at you as the provider, like, you're paying this or you're out. And then if you don't have the capital to pay that claim, I mean, that little oversight could cost you millions of dollars in revenue coming into your company, because you didn't take a couple of seconds to verify some of these key details.
100%. And that's the problem, is when you look at risks and revenue, it's, this is a great revenue, even if it's a returning customer, returning lane, hey, there's a lot of revenue in this lane, but the margins in that, especially for the freight broker, aren't huge, right? So then that's when one of these cargo losses can come in and just turn that whole customer, that the revenue you're making off of that customer, upside down.
So I think a lot of brokers are, and I'm trying not to like overly generalize here, but by law, brokers aren't required to carry insurance, right? But if you ever want to set up a shipper of substance, you need insurance. Like I don't care what the law says in these situations, you guys, if you go to a top tier shipper and you cannot provide any form of insurance, cargo insurance as a broker, you won't get set up. So like, let's explain that a little bit, because, when you're going out there and you're working with companies about their cargo insurance policy, what is the main difference between a freight brokerage going and getting cargo insurance as opposed to a carrier going and getting cargo insurance?
Yeah, so like you just said, back in the day, there wasn't really even a vertical for freight brokers to get coverage. When the cargo loss happened, it's whatever the carrier had. If nothing happened from that, then the shipper would have been, sorry, you're out of this financial loss. Then as as the space grew and competition came in, the shipper side knew, hey, we can start installing these contracts because there's a lot of demand out there. There's a lot of people wanting our business. So now when we give them our business, we're also going to put a caveat in a contract saying you're also liable for this cargo coverage. So that's what now creates that, hey, prior to signing this contract, you're not liable, but now signing this contract, now you're liable for this cargo coverage. Now you're, in most instances now you're actually taking on kind of that primary carrier cargo liability. Mm-hmm. So that's where, as underwriters, where we start looking at risk and we're looking at the freight broker risk is, okay, how many of these contracts are you taking on? How much is that, your percentage of freight? How much of your freight is your standard freight broker liability where you're not, and then where you are? And then you go from there. As the kind of difference in the nuance between the carrier and the freight broker getting, looked at and underwritten by the insurance side is, the carrier, you at least know who you're operating, who's servicing the freight, what's your SOPs, all that. When you get to the freight broker level, obviously there's a network of multiple carriers. So all of these are going to have different, different ratings, different safety, measures in place, different carriers, different drivers, all of that. So that's where it's a little more difficult of a risk because you're looking at more of a blended risk pool on the servicing side. So there's a lot more factors you take into place.
So how are brokers, when they're going out there and they're purchasing cargo insurance for their operations, I feel like the exclusions list out there might be a lot longer than some are aware of when they're going and they're purchasing insurance, right? Because again, a lot of people look at insurance and they roll their eyes at the cost of what it is, right? But at the end of the day, you guys, trust me, it's worth every penny in the event something goes wrong, right? So it's how are you advising your clients about any of those hidden exclusion traps in there? About maybe it's maybe they're looking for a new provider, they're coming to you, Billy, and they're like, hey, FYI, this customer that you're hauling freight for right now is not covered under your current policy.
Yeah. So, we're in a unique position because we're on the underwriting side. So we'll work with various insurance agents and insurance brokers to be able to kind of understand where they're at. So on the insurance broker side, that is something, number one, that they need to be able to help their client out, because obviously they lean on that insurance professional to help advise on coverage. Mm-hmm. So that's exactly where you have to look at. And I'm sure the first thing, if they're looking for a new, that freight broker is looking for a new insurance advisor, the first thing that insurance advisor is going to come in is going to look at what the current policies you have in place are, mm-hmm. where they see potential gaps, and then what coverages can help stop those gaps. And then there's also cost-effective ways to do it all. On the underwriting side, obviously, the more loss we pick up, the more expensive the policy is. So that is an inherent way to do it. So there's for freight brokers, there's two coverages out there. There's their own liability coverage. So they get, it covers anything that they have up to their contracts or up to what their standard liability is. And then there's a secondary coverage, which is this all risk coverage, which can be used in tandem with your own coverage that is a transactional cover to help say, okay, we're going to cover 75% of your loads through this one policy. And then when the need comes, we'll shift it to this cost-effective policy that you don't have to pay for upfront. So when the need happens on your end, we now have a solution and a trigger to cover that load when that need comes about.
So can you explain the difference? Because I think when a lot of individuals are out there and they're like, oh, we have contingent cargo. How does that differ from standard cargo insurance?
Yeah. So it's all about the trigger of loss and kind of what is the nature of loss on the policy. A contingent cargo policy is in the name of the freight broker. So the named insurer is going to be the freight broker. Mm-hmm. And the trigger of loss on this is a liability policy. So it's a negligence-based loss trigger. So it's going to have to be shown that the freight broker is liable for that loss. So that means they signed a contract that says, hey, where I liability. The other form of cargo insurance in there, the all risk cover, that is a property cover, what we say. So the trigger of loss is just damage to goods.
Mhm.
So it's a little different. That's why that policy is actually quicker to settle, because you don't have to say who's liable for the loss. Is it the carrier? Is it the freight broker? Where are all the contracts standing? It is more of, hey, is there damaged cargo? And now we adjust based off of what the policy reads, and now we can settle that claim. So the benefit of coverage for the contingent cargo is in the freight broker's name. The benefit of coverage for the all risk cargo insurance, that's actually in the shipper's name, and then that gives them that first party benefit for the claim. So there's a little nuance there. And it is difficult. Obviously, the insurance market doesn't make things easy with all these different types of coverages, but they are built in to kind of trigger in different loss scenarios.
I look at a lot of this stuff, Billy, because it's like I think anybody out there who is trying to balance a budget with their P&L, they're seeing different coverages come across, and they're like, oh, that's the cheaper policy. We're covered here. And again, it's like I don't have access to everybody's bank accounts and checkbooks and stuff like that, but it's easy to think about it in the moment when the sun's out, like, oh, hey, let's just go with contingent, we'll be fine, most shippers accept that, everything will be all right, until there's an issue, right? And it's like, and then all of a sudden, boom, it's denied. And I don't want to be a doom and gloom, but like I also want people to understand that like the more freight you move, the higher the risk of something happening. And then you put all of this time and effort to prospect shippers, get in the door, get the systems established, you start moving their freight, and then something happens, and then your insurance company or the carrier's insurance company it's going to fall on your shoulders. And I just want to help people avoid this situation. Like unfortunately, I've doing this as long as I have, I've been through a couple of not so ideal situations, but it's taught me a lot of this. And it's also helped me appreciate what insurance actually does for your business. So, another thing I want to talk about here is the standard $100,000 cargo policy that you see out there, right? And, so I want to talk that, but I also want to throw this caveat on in there, especially with how freight raises in value, right? When it comes down to other things where it's like, oh, it used to be $97,000, $98,000, but now with inflation and other factors, it is now $107,000. And so if you can kind of talk about that a little bit.
Yeah, so that's obviously a natural, everywhere in the economy is feeling this inflationary pressure and what's happening to the standard space. And that is a concern. Like we're seeing values increase, over that 20% margin of when we, 5 years ago, right? The other problem what we're seeing is, so not only is freight value rising, but total losses rising, cargo loss, right? So in the past, if you just had rough handling damage, even if the value of the freight was higher, it would probably not be a total loss, and you would still be under that $100,000 mark. Now we're seeing with the current state that everyone's battling right now with theft, is cargo losses now, because of that, growing much farther above that $100,000 mark as well. Then the other caveat is the carrier side doesn't really pick up this type of loss because there is no really valid carrier in a lot of these circumstances. So now you're leaving a bigger gap. So now we're seeing not only a rising value of loss, we're also seeing a bigger gap of what is actually that $100,000 picking up. Again, it's a very, as you mentioned, it's a very difficult place especially for freight brokers, because now they're living in a scenario where they're trying to grow their business, and now their risk of growing their business is increasing as well.
Hypothetical question here, Billy. Yep. Broker and carrier have $100,000 cargo insurance. The shipper notifies the broker that it's $110,000 cargo value. They don't purchase the rider to cover that excess $10,000. say there's complete damage to the load, it's a complete loss. Does their coverage still cover $100,000, or knowingly that they took a higher value cargo and didn't purchase additional insurance, is their policy null and void?
98% of the time, you should kind of cover up to what your policy states. So, I think we're seeing on the freight broker side, the standard limit going from 100,000 to 250,000 just for those circumstances. It is obviously a more robust policy. You're going to pay a little bit more for it, but in the long run they're going to pick up a little bit more of these circumstances. And then, kind of nuance back to that is, okay, how do we utilize the rider and there's a million names for it, spec insurance, all those different names for it. How do you utilize that to also? So, we do see some that say, hey, we're gonna just lower our limit, lower our introductory costs into this space, and then we're going to utilize this rider for when it happens. But like we said before, freight moves fast. It is sometimes you're going to some stuff's going to fall through the cracks there. So that probably be looking at, if I was a freight broker and a risk manager, looking at kind of how I'm going to address that. Bringing up my own limits is probably the best scenario there.
What would, so again, this, like, if you can't answer this question, I completely understand. But I know a very real scenario happened here for a friend of mine who owns a freight brokerage. They were under the impression that the cargo value was not exceeding $100,000, but the customer, the shipper, took it upon themselves to load high value cargo in a trailer. That trailer, unfortunately, was stolen. And now the shipper is trying to sue my buddy for excess stuff.
That it all comes down to the contract. It's if and that's another big thing for a freight broker is to really focus on their contracts and what they're signing, what they're agreeing to on the shipper side, but then also what they're agreeing to with their carrier partner, right? What are they agreeing to there? Hopefully they had something in their contract where it limited their liability for to a certain value limit that coincides to what they thought. Unfortunately, if there was something that was missed in the contract, they might have to be now seeing that the shipper is trying to sue for them. Obviously, everyone tries, doesn't mean you can win necessarily. But not knowing too much of the details. Unfortunately, Unfortunately, I can't make a big decision on that one. But I would. Yeah, it comes down to the contract. But that's a great antidote for why on the freight broker side you should be really diligent about what contract you sign. Don't just sign the contract because you want the revenue. Know what happens when you sign that contract, and then work with your insurance advisor to make sure that your coverage is aligned with that contract.
Yeah, it's again, these are just like, I don't ever want to sound like doomsday with some of this stuff, but like these are the things that people need to be on the lookout for, because like unfortunately not everybody's your friend out there, and these things do happen. And again, the more freight you move, the higher the risk and your exposure is going to be to some of this stuff. And again, like this is why I always mention people like you got to take 5 seconds on the front end to take your time, dot your I's, cross your T's, and make sure you actually understand what you're getting yourself into, because otherwise you're going to potentially be on the hook, whether it's for the total value of the load or your attorney to fight this tooth and nail to ensure that you don't have to pay it. And, I want to pivot here a little bit with fraud and double brokering being as prevalent as it is. I am of the mindset it's going to get worse before it gets better. Do you see fraud or double brokering coverage becoming a thing in the insurance world that brokers and carriers can purchase?
Very much so. And I think it's at the start, the insurance market did not have it addressed. And now you're starting to see it being a standard exclusion. Mm-hmm. And then you're going to have to buy it back. Essentially, buying it back just means you're going to have to pay more for that coverage if you want it. So that's going to be kind of where the state now on the don't want to benefit the underwriter too much, but on the insurance market side, is because we're seeing almost 300% increased loss on frequency on those style claims. So they're driving up that frequency of loss, and then they're also driving up that severity of loss. So that's why the cost of premium kind of has to dictate with that and flow with that. So but there are coverage there now, and I think that's something that is, like you said, it's going to get better. That it's going to get worse before it gets better. Obviously, there's a lot of great vendors out there. There's a lot of great tools out there. Unfortunately, these guys move faster than that. They're very knowledgeable about the technology side of things and where vulnerabilities lie. So there's a lot of exposure out there, and it's going to keep growing. So definitely look into and ask those questions. If you have a policy right now, make sure you ask those questions right now on, do I have coverage for it? And if you don't, there are ways to get that coverage back in different mechanisms.
You guys do a lot of loss prevention out there. What's a piece of tech or vetting steps that you see brokers or carriers starting to utilize that like lowers their risk profile?
Yeah, and I think the biggest thing here is there's no silver bullet. It's going to be a combination of a lot of things. And I will say this, it's not just the software you use. The software helps, and we mentioned this before, right? Things move so fast. There's no way that your team, while you're procuring freight, can manage this on their own, right? They're going to need some type of platform, some type of tool to help them maintain who your carriers are, and then also work on the back end on making sure you're choosing that right carrier. I think it's a kind of multiple steps here on loss prevention. I know our loss prevention team says it's more of a group of things rather than just one thing that you can do. You're never going to buy one piece of software that's going to make you bulletproof. You're going to help align your SOPs to help develop these SOPs and lean on the technology to make sure that you're looking at the right things. You're getting carriers that fit this certain profile, and then it's also on carrier selection, on making sure there's some things your own team can do to say, hey, have we this is a high value load. Have we used this carrier recently? Do we have a trust level with this carrier? Is there ways that we know that this one's someone that we trust to move this load?
Do you think that, because again, like I move a lot of high value cargo, right? Like the overwhelming majority of the freight that I move is $250,000 plus. And it's like going out there and being able to get that real time rider and everything is massive, right? Because it's like a lot, fortunately, like in the open deck and heavy haul space that I play in, a lot of the carriers out there are 250 cargo holders as is. But in the event we find that, again, it's like having those little steps in place. And that's one thing, like seeing that digital, like going on there, being able to log into your insurance provider and then purchase that rider and get that instant quote and secure that additional insurance. I just look at it as that's just another step in the right direction for the industry as a whole. And, I just look at it as like when the risk that I see out there as a provider is the revenue that it's costing you by not having that ability to go out there, I think far outweighs the risk that you take by choosing the cheaper policy to try and keep your overhead down. And again, I don't know everybody's P&L, but like I look at insurance and your understanding of your policy as like the silver bullet to navigate through a tightening market when it comes down to margin compression, because margins aren't just going to miraculously improve overnight in freight. And again, you got to look at these things like, how do you do that? If you're going to only go with a $100,000 cargo policy, does your insurance provider have the rider ability to go on there so you can purchase it on a shipment by shipment basis and everything else? I'm just trying to help people understand, like, your insurance agent isn't your worst enemy at the end of the day. Like they are truly here to help, and more times than not.
They are here to help. And the insurance industry is starting to really, the insurance industry is probably one of the slowest ones to adopt technology, right? It has been one of the slowest ones, but they've done a great spot. The insurance community is starting to develop ways to make it easier to transact this coverage and help it easier to find this coverage. And that's where, obviously the best case scenario, as you're looking at tools that, arm your your operations and everything is if you can find that embedded coverage. That's where it's easy to transact. It's there. You can click it. You don't have to leave your environment. You can stay within where you're booking freight, and you can also kind of tie into where you have those other risk management tools that can vet your carriers and have it all in one place, so that your workforce and the ones that are procuring the carriers kind of have everything there at their disposal to mitigate loss.
Perfect. Billy, I appreciate your time today, man. This flew by. Like I said, I'm not lying. I love talking about insurance. I can talk about this all the time. But man, how does anybody reach out to you guys to find out more about what you got going on?
Yeah, Falvey Insurance Group. You can find us online at falveyins.com. Reach out, and again, we're on the underwriting side, so reach out and start with your insurance broker and your insurance advisor. That's where you can start doing the best. That's where they have the knowledge, they have the space, and they can come and find underwriters in the space that can help provide this coverage for you.
Perfect. Billy, thank you so much. If you guys can't find them out there, hit me up. I will gladly put you guys in contact with them. But that is going to be it for today, ladies and gentlemen. As always, if you got value in what you heard and you're not subscribed, subscribe to the show, you guys. And if you're feeling ambitious, rank it on iTunes and Spotify, because if you see value, your network's going to see it as well. I appreciate you guys. I love you guys, and we'll be talking to you soon.
Came back with a bang, window down, yelling out money, anything. Hey, ooh, got the foot on the gas, pedal to the metal when I'm getting to the back.